Guys, what's up? Monday, September 15th, tax day. But we had a pretty good day in the market today. NASDAQ up good. All the indices are up. I read over my MMT trader report after I send it out on Sunday evenings. It's always good for me to go back and read what I wrote, because as I'm putting it together, different elements go into it. Maybe I'm not, seeing the big picture. But then I go back and I read it and I'm thinking to myself, I don't really see anything negative in here. I mean, conditions are pretty good, at least, in the analytical framework that I use. So I don't see any problem right now. It is tax drain this time of year. We have one today. Last year it was like 130 billion, and it took until like October 2nd for that to be recovered, that'll bring us into the new fiscal year. And don't forget that Congress has to either pass a budget or a continuing resolution before the end of this month. And this month, like I told you guys, there will be a surplus on the government side. So that's the way I express it is a net transfer to the government sector from the non-government sector. And of course, I'm telling you this stuff before you're ever going to hear about it. You'll hear about it, sometime next month. But I'm telling you right now, just like I explained why August had a very not a very, but a large deficit. That's what the media calls it. I don't call it that. It's because September 1st of the month payments went out on August 29th. They don't tell you this stuff. I tell you all this stuff, and they make a big deal out of it. Speaking of making a big deal, today, it never ceases to amaze me. I gotta be honest. Today I saw a headline or a story online that said, investors better be careful because the 10-year Treasury yield just bounced back up above 4%. So I'm thinking to myself, like, all these guys ever do is warn about something. Everything is a warning, okay? When the 10-year yield was at 460, they were warning us. When the 30-year was at over 5%, they were warning us. When the Fed started to reduce its balance sheet, they were warning us. When the yield curve was inverted, they were warning us. When it went back to a steepening yield curve, they were warning us. When the Fed was going to raise interest rates, they were warning. Every single thing is a freaking warning. And they're wrong every single time. And now, it's just like hilarious. So the yield dropped down below 4%, which I told you last month, even before last month, that the yield on the 10-year was going to trend down to 4%. We actually got below that last week. And now it popped back up to like 404. And I told you that it's very feasible. The Fed's going to cut rates on Wednesday, 25 basis points. So now we're going to be in a trading range slightly below 4% to maybe could be up to 4.25, because that's going to be the new range, okay, for the new policy range. It's no big deal. Just like when the policy range was 4.25 to 4.5, and every time it got up to 4.5 or even slightly above, I said it's no big deal. It's still in the policy range, and the Fed is telling everybody we're going to maintain this policy range. So it wasn't going to go anywhere outside of that range. And now the range is going to be 4% to 4.25, so it's going to be pinned in there somewhere. Now, they always put a negative spin on everything. Like it's down below 4%, or now it's 4.04, and it's like, you better be careful. You're being warned, investors. The fact that it went back up over 4% by 4 basis points, you better be warned. I mean, what the hell is this? The good news is, as I always say, I mean, you could just take advantage of this because it is sheer stupidity. Sheer stupidity. Now, let me talk a little bit about the Fed meeting and, the rate cut that's going to happen on Wednesday. I believe that Powell is being dragged into this rate cut kicking and screaming. He doesn't want to do this. He doesn't want to do this because this is what Trump wants. It's what Trump predicted, okay? Trump's been saying, like, rates got to come down. Inflation is marginal with the tariffs, blah, blah, blah. And Powell, we've seen him. We've seen his personality. He's egotistical. He's petty. He's vindictive, okay? And I believe he's being brought into this rate cut, or he's going to have to go along with this rate cut, kicking and screaming. He doesn't want to do it. I don't think he wants to do it. But right now the pressure is on. The markets are saying, Fed got to cut rates. And we know the Powell Fed, what do? They always follow whatever the market dictates. That's why I always say, like, what's even the reason to have a Fed if all you're doing, you're the monopolist, but you're letting the market dictate anyway. So what he's going to do, I think, to kind of get back, because he doesn't want to do this, but he's being forced to do this by the market. What he's going to do in his press conference, I think, is come out with a very hawkish tone. In other words, he's going to warn, there's that word again, he's going to warn everybody, hey, we're giving you this rate cut, but don't think there's going to be any more coming down the pipe, okay? He's going to slam it. And so what's going to happen is bonds are going to sell off on Wednesday, maybe even Thursday, which will provide you with another great buying opportunity for treasuries, all right? Like, he doesn't understand. Like, these warnings and all this stuff, I mean, it's getting to the point of being silly. Like, he's so exposed for his pettiness and his vindictiveness, and his dishonesty. I've spoken about that many times, how this guy is really, really dishonest. What he doesn't understand is that by slamming it down, the bonds on Wednesday, which I'm pretty sure that's going to happen, he's going to come out with a hawkish, commentary in the press conference. What's he doesn't understand is he's literally handing to you on a silver platter very, very low risk entry points for treasuries. Every time and I'll tell you why this is true. Because when he made that speech at Jackson Hole back in August, where he said that the Fed is switching its decision function, its policy decision function to the labor market, that was big because, he kind of de-emphasized the inflation decision function. And he said, now we're really kind of looking at the labor market, and the labor market is weakening. Okay, it's weakening for 2 reasons. Number one is the fact that firms, because of the tariffs and the increased cost of tariffs, firms are now trying to maintain their profit margins, and the way they're doing that is cost cutting, and the way they're cutting costs is reduced hiring, and maybe in many cases, or in some cases, layoffs. So we're not going to see big job creation. That's number one. Number two, the implementation, the rollout of AI, artificial intelligence, as a means of increasing productivity. Okay? This is actually good for a sector of the stock market. That's why these tech stocks are doing really, really well, because the rollout of AI. and it's going to get more rapid. It's going to get, broader. This is very bullish for these stocks. So with the Fed now focused on the labor market, by his own admission from that speech he made at Jackson Hole, they're going to be cutting rates, even though he doesn't want to. So every time he tries to kind of backtrack or come out with a hawkish comment, he's handing you an easy, low-risk entry point. So every time that happens, you add to your bond position. You add to your bond position, however you do that, whether you do it with futures, whether you do it with cash bonds, whether you do it with ETFs. That's what you want to be doing. And so, like, the joke's on him, man. The joke's on him because he thinks like, oh, I'm going to get back at these people. I don't want to be doing this, but, the market's forcing me to do this. But even if the market's forcing, I'm going to get back. He's not getting back at anybody. And before you know it, it's going to be next year and he's going to be out of there. He's not getting back at anybody. Next year is going to be a whole different story, I think, because, we have a lot of things that are coming together. The tariffs, the rate cuts now, very interesting. And I see a lot of articles or commentary saying, with respect to the rate cuts, they're saying, be careful what you wish for. But like, they're saying it in the context of, oh, be careful what you wish for because the rate cuts are going to be inflationary. They're not going to be inflationary because what are rate cuts? I've explained this a million times. Rate cuts are price reductions. They reduce the general price level, number one. Number two, they're fiscal operations in that they remove interest income from the economy. So they actually drain the economy of income. That's not inflationary, number one. And it's not that bullish when you think about it. So we already have seen with the Fed rate cuts that ended, last year, we already have seen a $42 billion drop this year in T-bill interest transfers. Now, I said this in my last video that total interest income transfers are still up for the year compared to last year. They're up like $62 billion. But that $42 billion drop in Treasury, in T-bill interest, that's going to get much bigger with, the market is like pricing in 3 rate cuts this year, 2 more after this one. So, we could hit that inflection point. And remember, I talk about inflection points. I talked about inflection points in 2022 when I gave the exact date when that stock market sell-off in 2022 was at the point where you wanted to buy it, right? 2022 was when the Fed was raising interest rates. I gave the exact date, October 22nd. And I will see that inflection point here with the rate cuts. When those interest income transfers are wiped out, that's going to be the inflection point. And it can happen pretty quick. So you want to keep up on this. You want to keep up to date on this. These are the things that matter, not these silly articles like you're being warned that the 10-year yield just bounced back above 4%. They were just warning us a couple of months ago that it was at 4.6. You better be careful. Now it's at 4. You better be careful. These guys are incredible. Anyway, that's it for today, folks. Thank you for watching. Please like and subscribe. And don't forget to go to my website, pitbulleconomics.com. Sign up for a 30-day free trial to MMT Trader. See you tomorrow. Bye.